So whenever there's a kind of a negative decline in money flow, markets are typically declining in that process. Well, money flows have declined. They got fairly negative during that sell-off in the markets. They've now kind of bottomed, turned up, and then went positive on Friday. So we're starting to see the early signs here of money flows starting to come back into the markets. That's also indicative that we may have had a short-term bottom. Here's what you need to know before the bell this morning. As we talked about in the newsletter this weekend, the big question from everybody right now is the correction over? And the answer is nobody knows. However, there's some things that we can look at that suggest that yes, we may be through at least the worst of the correction that we've had over the last 3 weeks, which has been pretty vicious. I mean, this has been a very, very sharp decline, 10% peak to trough, in just the course of about 3 weeks. Normally, if we go back to like summer before last, we had a 10% correction, and it took about 3 months to get through that. I mean, it was just kind of a grind lower, and we kind of kept bouncing on the way down as we were going through that correction. This was much faster, just basically 3 weeks, peak to trough, had a lot of selling come into the markets. Part of that had to do with the decline in the dollar. We had a lot of foreign assets in the U.S. equities, so when the dollar declined, at the same time that equities were declining, that caused foreign investors to pull their flows out and move them into foreign stocks because they were getting hit twice. They were getting hit by the decline in the equities and the decline in the currency. So their losses were actually much more significant than a U.S. investor just in the market. So it makes complete sense that they would withdraw money from here, put it back into European stocks, and particularly since those were holding up better, that those flows from the U.S. into Europe is what caused that rally in emerging markets and international. So the one thing to watch here is if we start to see a reversal in the dollar, we will also start to see foreign inflows back into the U.S. as well. But having said that, a couple of things, as I said, there's a couple of kind of things happening that suggest that we may be nearer a short-term low than not. First of all, the momentum signal is about to trigger a buy signal. If we get a rally today, right now futures are pointing higher over this kind of pullback in tariffs. So again, if that triggers a MACD buy signal here on the momentum basis, that will suggest that momentum starting to come back into the markets. Relative strength has turned up as well from lows. That's also kind of a good indicator, starting to see some buying coming back into the markets. But speaking of buying in particular, money flows have turned positive. So again, as I've told you before, the one thing to really kind of watch is just pay attention to money flows. That's this shaded area in the background on this chart I'm showing. If you're driving, don't worry about it. You can watch our show later when you get to a place you can sit down and watch our YouTube show. But money flows, whether they're positive or negative, certainly makes just logical sense, right? If I've got money coming out of the market, stock prices are going to decline. If money's going into the market, stock prices are going to rise. So whenever there's a kind of a negative decline in money flow, markets are typically declining in that process. Well, money flows have declined. They got fairly negative during that sell-off in the markets. They've now kind of bottomed, turned up, and then went positive on Friday. So we're starting to see the early signs here of money flows starting to come back into the markets. That's also indicative that we may have had a short-term bottom. Again, nothing's guaranteed, and nothing, you should never take anybody's like, oh yeah, the market's about to take off and rally to the moon. You know, just be cautious, be careful here. That's all we're saying. But there are some indications that that bottom may be in. And historically, 10% corrections tend to be fairly short-lived. They're normal occurrences, as we've talked about before, happen every year. And then we recover from this and at least get a rally. Now, where the rally goes to next, what happens next, that's something we're just going to have to work through together as we get there. But this is probably not the time to be selling. Again, this is probably the time to start looking to rebalance your portfolio as well. Look to pick up some opportunistic positions that you've been looking at. You know, trim stuff that's not working, raise a little bit of cash, certainly wouldn't hurt here. But just manage your portfolio and your risk accordingly. That's all in the newsletter this weekend as well at the website, realinvestmentadvice.com. But that's what you need to know before the bell.